Some of you in the room may never pay off your mortgage because you have no intent to pay your mortgage off. That's probably no one in this room, honestly. Maybe there might be one person, one or two people in the room. But for the most part, I lean more toward living a debt-free life on the personal side. Maybe I'll leverage some debt here and there. But for the most part, I don't want to have payments, and I'm willing to miss out on opportunity costs to have the peace of mind of no payments. For the most part, everyone in this room probably leans that way for the most part. But there is a camp online. There are some financial professionals, some content creators that preach the never pay your mortgage off early. They preach 30-year mortgage, keep it, pay the fixed payment, invest, save your money, and then they'll even preach refinance that 30-year, reset the clock again. Just keep having a 30-year mortgage. When you build up equity in the property, they educate you to refinance. One of the reasons why they think this way is because of how risk and ownership work. So if you're talking to someone or if you're listening to any content online where someone is coming from the camp of, Denzel, never pay your mortgage off because you don't really own your home, number one, even when you pay it off. Number two, from the bank's perspective, it's more risk for the bank to foreclose on someone that has a large debt balance compared to the available equity in the property. It's more risk, more cost for the bank to foreclose on that person over, let's say, people in this room that have been accelerating their property for many years now, and you've got 300-400 grand of equity built up in your home, and maybe you only owe 100,000, 150, 200,000. The bank can, there's some sort of clause where they can call the loan on that property. So even though you've been faithful, paying your mortgage on time, you got all this equity built up in there, and all of a sudden the bank pulls the rug right from under you and says, hey, you need to pay us in full within 30 days of that remaining balance of the 100, 200,000 that you owe. The reason why that bank would go after that person over the person that has a $500,000 mortgage with equity of only 550 in it is because it costs the bank too much for them to call a loan on that and then have to resell it again. Versus that $100,000, $200,000 balance with the $400,000 plus of equity or more, they can rebalance their portfolio, their balance sheet, by calling those loans. There's an argument to be said there, to be had, because of what happened in 2007 and 08, where a lot of the banks were failing and loans were being called, HELOCs were being frozen. I can see the argument for that. I'm coming from a school of thought in 2025 that from 2008 to 2025, banks are no longer allowed to just do that to people who are faithfully paying their mortgage payments on time. That there has been legislation that has been written over the years. There has been more of a longer notice for the client, more of a warning for the customer, more protection for the customer. If a bank is going under, there's other things that can be done to protect the homeowner. I also come from the school of thought that in 2025, let's just say I've got a first lien HELOC with University Bank and I owe a little over 400,000. Let's just say, let's say my house is worth 700,000. I owe 400,000. My credit line is 560,000. So I have a ton of equity in my home. And let's say I get something in the mail that University Bank is going to freeze my first lien HELOC. They're going to close it up. Or they require me to pay my loan balance in full in advance. And let's just say I'm not in a position to do that. Listen, if University Bank is doing that to me, I'm a 95% sure that University Bank is doing it to a hell of a lot of other customers. And if University's bank is doing it, guess what? A lot of other banks are doing it. And guess what? If that's the case, chances are there's probably a civil war going on. There's probably civil unrest. There's probably rioting going on the street. And let's say that's going on. Listen, I'm armed to the teeth. So if you want to come take my home, come take it. So I come from that school of thought where it's like, what are you going to do? Are you really seriously going to try to pull the rug from a prime borrower, paying his bills on time, great credit score? I don't see a world where that makes sense. And even if that is the case, who's coming to take my home? Like, who's coming? And if they are, well, they're going to be met with something, because I'm going to say, listen, like, what are we doing here? We can negotiate. The other school of thought that I come from is, well, I'll just move my business to North Point or First Savings Bank, or I'll go to any bank that will do business with me. So I have multiple contingencies, from the arguments of never pay your mortgage off because of, like, you don't really own it and all this stuff, that the bank can do this to you and the bank can do that to you. And I'm like, look, we're in 2025. If that happened, you're going to see a hell of a lot worse than BLM riots. Like, a hell of a lot worse. Because you're going to see the white people come out. When the white people protest, it's a different ballgame, folks. And I'm just going to, I'm someone that's going to pay attention, be aware, and know what's going on in the political marketplace for banks to have the cojones to try to do that to its members, to its customers. Like, I don't see a world where that can possibly happen like it happened in 07 and 08. 07, 08 to me was like a tester to see how much power the banks had. And then government stepped in and they changed some things. So over the years, I don't see how they can possibly do that now. And again, it's just going to be a different ball game if they try to pull that again. Totally different ball game. Because they're just going to have bigger problems. There's going to be way bigger problems going on. I'm telling you, civil unrest, riots, breakouts, all kinds of things. And that's where I resort to having to protect myself in that situation, because I don't see a world where, whether it's military coming out, knocking on people's doors to kick them out of their home, of prime borrowers, great credit, pay the bills on time. It's totally different if, like, I decided to say, F you, I'm not paying my mortgage. That's totally different. Yeah, they'll get foreclosed on and police will come in and escort that person out of the property because it's no longer theirs because they weren't making the payment. I totally get that. But pulling the rug on a prime borrower, great credit, good cash flows, good income, like, I don't see that. So I don't, you know me, you've never heard me advocate someone to not ever pay off their mortgage, but it's a strategy. I totally get it. I totally get why they're coming from that position. And then they'll use the invest instead. So instead of investing to pay off your mortgage, they just say never pay it off and invest for as long as you live. Like, just keep investing. Keep all that money. When life happens, boom, you're able to handle it, have reserves, have savings, things like that. Okay, so we went over some costly mistakes, went over the first lien HELOC. We went over all the mortgage payoff strategies. If you believe I missed one, go ahead and comment. I pretty much covered all of them from what I understand. Maximizing, cash flow based on the strategy that you're going to choose, that you're going to commit to. That's the one that you're going to get the best results from, even if maybe another strategy that's more complicated might yield better results, but you end up not doing it. So keep that in mind.